Hey everyone, hope you guys are doing well. This is the Deep Dive. My name is Drew Creekmer, and I'm a wealth advisor here at Creekmer Wealth. And today I'm joined by our founder and senior wealth advisor, John Creekmer. And John, it's we got a bunch of stuff to cover here, but I was just thinking yesterday about how crazy it is, how fast the summer has flown by. So I want to hear from you. What have you been up to this summer?
I'll tell you what, I've been just trying to survive. Actually, it's been weird. The entire country, wherever I've gone, it's been so hot, and which I love the heat. 95 degrees with 80% humidity is like heaven to me. I know it's not, but that is how I love it. That's what I enjoy doing. But seasons are changing, and so we're going from Memorial Day when we were just early in summer. Now the new season, and so in Illinois we also have construction season where all the roads are shut down. But now we're heading to Schwab TD Ameritrade merger season. So that's probably a new thing on the calendar that's coming up. I am giddy with excitement to get that merger all the way done and behind us. That's for sure.
Yeah, absolutely. And it's one that, John, we've been planning for and preparing for over the last, honestly, couple of years. And so let's kind of recap where we're at with this merger. And, a lot of folks have received packets in the mail in the last couple of weeks with their Schwab account numbers on there. And so, John, I think first and foremost, walk us through again what's going to happen over Labor Day weekend. And is there anything that people need to be doing at this point?
So actually on Labor Day weekend, you'll go to bed on Friday night and your TD Ameritrade account will still be TD Ameritrade. And keep in mind, we have clients that are on different platforms. And so we have some that are directly at Charles Schwab. We have others directly at Fidelity. And we have a large number, about 2,500 clients that are directly at TD Ameritrade. So if you have a TD Ameritrade account, you're going to go to bed on Friday night with your TD Ameritrade account. And then they're going to be converting all of the institutional accounts like yours over to Charles Schwab's accounts over that weekend. And then on Tuesday morning, whenever you get up, you will actually have a Charles Schwab account. So it should be pretty seamless. We're being told that nothing is going to be needed on your end as far as to actually make that happen. And so it should pretty much flow through. Now, that being said, we are prepared starting on Tuesday morning to eventually confirm everything and make sure everything is set up properly. If we need to do anything in addition to that, we'll definitely let you know.
Yep. And, the only thing that you may want to do at this point in time, if you have login access to TD Ameritrade, we would encourage you, if you haven't done already, to log into TD. At the top of your screen, there's a blue banner that will prompt you to go ahead and set up a login at Charles Schwab. We would encourage you to go ahead and do that so that you have that login at Schwab set up so you can log into your accounts after that Labor Day weekend conversion. But outside of that, John, that really is the only thing that folks maybe need to consider doing at this point in time.
I think my mom summarized it best. She goes, so really, it looks like the only difference is before I had a little green box on the top of my statements, and now I'll have a little blue box. And I said, well, Mom, that's probably about it. So hopefully that's all we're going to see is different.
Yep, absolutely. So if you guys have any questions about that, by all means, reach out to our office. Our team has been preparing for this for a long time, so they should be able to answer any questions that you have. Now, John, let's kind of transition. A couple weeks ago, we were at an industry conference with a good partner of ours, and they were talking about ways to help clients pick up nickels, so to speak. It may not seem like a ton of money up front, but over time, those nickels can accrue to a much larger dollar amount. And so with interest rates having risen the way they have, we just wanted to ask you, what are some ways that folks can go about picking up nickels in their financial life?
Over the course of the last year, so until 15, 18 months ago, interest rates were so low that it didn't really matter where you had your cash dollars sitting, you were going to get paid a very low interest rate. But we knew Federal Reserve raised interest rates, and really this transformed the entire financial marketplace, not just the equity side, but also the cash side. And presented some more risk. And so with that risk, make sure you pay attention to safety, even in your banks, because they are actually having challenging times trying to match up deposit rates with loan rates. And so that being said, Drew, we've seen a number of things happening, and we actually started to proactively, at the beginning of last year, bring a number of solutions to our clients at Creekmer Wealth Advisors. So first of all, we actually set up a money market account with a firm called Stonecastle. And so you may have heard of CDARS or FINet at a local bank. It's simply a competitor of theirs. And so you could actually have a money market account with Stonecastle that pays right now 4.65%. And Drew, I hear some whispers that's going to be bumping up close to 4.9%, I believe, coming up here in the next couple of weeks. And so if you have money sitting in the bank and you're getting 0.1, 0.25, or 1%, and you want a cash account insured to $25 million, that could be a great solution for you. But Drew, I think there's an account minimum on that, isn't there?
Yeah, there is. So if you do not have a Stone Castle account set up as of yet, the minimum is $100,000 to deposit into that account. But John, that account's fully liquid. It's just like any other money market or savings account. If you need to get those dollars because a large expense came up or something's going on, you're able to transfer those funds in a couple of days back to your checking account. So it is fully liquid, which is a big thing to remember. But that rate is very, very attractive at this moment in time. Outside of that, John, is there anything else? Any other opportunities that are kind of out there?
I'll tell you two other ones that we're seeing right now with a lot of clients are really initiating on the cash side, or maybe you'll even refer to it as that second bucket. So if you have your emergency fund in your first bucket, your second bucket really is those dollars that you may not need for 2 or 3 years, but you still have daily liquidity. And that's setting up an account at Charles Schwab. And then once the funds are set up there, we actually have some cash management strategies that are paying some phenomenal yields. FTM, Drew, is paying a really nice yield right now. And so we're seeing somewhere in the 4.5% to 7% range as far as on yields of some cash products. However, the principal does fluctuate a little bit from day to day, so you want to be aware of that. But also the third area we're seeing, Drew, is the utilization of a fixed annuity or a fixed indexed annuity. And I'll tell you what, 4 or 5 years ago, we were using those tools on a very selective occasion. But right now, with interest rates having gone up, the insurance companies have actually changed and enhanced their products to where you can have a 3-year, 4-year, 5-year fixed annuity where you can walk away at the end of the term getting paid over 5% for the entire period of time. Or a number of fixed index annuities, they're actually giving you a bonus up front between 7% and 19% in the first year deposit. And on top of that, you can earn interest based upon movement in the stock market without a negative principal movement. And so a couple of ways, depending upon your time frame with your cash, that could be phenomenal solutions that we were kind of on the front end of bringing to all of our clients this last year.
Yeah, and so, we've really, like John said, we've really tried to expand the offerings with this rising interest rate environment to be able to help you guys achieve your goals. So if you have any questions about what we talked about here, we would definitely encourage you to reach out to your advisor. There are a number of phenomenal opportunities out there like John was talking about. And so we would highly recommend that. Now, John, let's kind of shift gears here a little bit and talk about a planning topic. And so, there are 6 or 7 different areas of financial planning, but one of them has to do with risk management. There's a bunch of different types of risk management. This could be your home insurance, this could be life insurance, disability insurance. But the one we want to talk about today, because we've been receiving a lot of questions about it, is long-term care insurance or home health care insurance. The cost for this, John, has rapidly increased in the last number of years, while the ways to actively actually have coverage in those areas has actually gone down. And so, John, kind of big picture for us, why is this such a critical topic and why is it something that people should be thinking about?
It's just phenomenal. So we have clients in all 50 states and actually clients all around the world. And so depending upon where you're at, the risk is higher. So what does risk mean? Think about it. You've worked extremely hard your entire career. You've saved, you've invested, you've accumulated a large amount of money, which is going to be there to accomplish a number of goals, either income during that next stage of life that a lot of folks call retirement, or it's there to provide the extra fun things you want to do, or it's there for security for your family, or maybe it's there to go to the next generation or be used for charitable purposes. So what is the risk to that money? Well, there's lots of different risks. Sure, the stock market could drop down, interest rates could go down. But one of the largest risks that people are really not either aware of or have done nothing to protect themselves from, that's the risk from medical expenses not covered by Medicare and Medicare supplemental policies. Fidelity's study in this last year, released earlier this year, says a 65-year-old couple should anticipate spending $395,000 over the next 30 years. And so we know the cost of medical care has gone up between 8 and 12% every single year, regardless of what the inflation rate is for standard expenses. But then on top of that, we also have the cost if somebody has a home health care need. And so we lose mobility, we've fallen, we've had surgery, or if there's a true long-term care need. And Drew, the cost for that varies all around the country. I know there's different ways of finding that cost, but it's a huge risk. And really the threat is to the non-institutionalized or the non-need spouse, or it is to the family coming behind, how are we going to pay for mom and dad's care if they've run out of all their money?
Yeah, and John, you talked about the costs, and I do have some numbers in front of me. So, in 2021, I'm looking at the Central Illinois location. So Bloomington, Normal, Peoria, Pekin. The cost for home health care annually in 2021 ranged from $75,000 to $80,000 a year.
For home health care, Drew? That's home health care?
That is home health care, yeah. Yeah, and it's projected, so in 20 years from now, it's projected to be close to $200,000 to $215,000 at actually a very conservative rate of inflation of 5%. And we actually know these costs are increasing by a larger amount than that. And so, John, when you think about it, that's a huge expense to potentially have every single year, isn't it?
It's huge. It's a drain on resources. And the question is, number one, is what you always want to do is you want to recognize what potential threats are. Then you want to say, how are we going to take care of that risk if you want to actually protect yourself and your spouse and your heirs from that risk? And so traditional long-term care insurance policies that would cover home health care and also inside a facility, the cost for that is actually rising. And the reason being is, and within all insurance, it's the law of large numbers. And so there are some assumptions that with the baby boom generation, that a large percentage of them would be buying long-term care insurance. So the reality is a very small percentage actually did. And so since there's fewer people in the insurance pool, insurance companies actually had to raise rates. And so whenever we see that, a lot of companies ended up losing money, so they went out of business. There's only a handful of solutions available for that traditional long-term care insurance policy a lot of people have thought of. But one of the many negatives of those policies is you set aside a large dollar amount of premiums. After a period of time, those premiums can change. And if you do not use the dollars for home health care or for in-service in a facility, you actually don't get the money back unless you have a return of premium, which doubles the payment that you make every single year. So because of that, Drew, we've actually seen a number of solutions that have been creatively brought to market over the last 3 to 5 years that provide what is needed within a pool of money solution, and it leverages the premium dollars you put in. You potentially get money back if you need to go into a facility, if you pass away, or if you just want to withdraw the funds, and earning competitive interest rate while inside the tool. So I'm not sure, Drew, if it makes sense to go into some more details there, or what do you think? Am I a little more solution to that, or what do you think?
Yeah, let's talk about the product from Global Atlantic. And I think it's important because it definitely helped address some of the issues that we've always seen with long-term care insurance policies by having the ability to earn a rate of return, but also have funds go back to beneficiaries if you don't use it. But the other aspect to that product, John, that's really unique is sometimes to get underwritten for a long-term care policy, it was very restrictive. If you had some pre-existing condition, it was almost impossible to actually receive a new policy. But what's unique about it is the Global Atlantic policy is much more flexible as it comes to underwriting. And folks who would not have traditionally been able to get long-term care insurance actually are able to qualify with this particular product. And so it's one of those things, John, that as we are always trying to find ways to help people achieve their goals and adding new products, this has been a really interesting one that we'll be able to add to address a number of those issues that we've seen.
And Drew, I believe on that tool, it goes based upon your health status, how you're doing. But just on a brief back of the envelope example, you can have a 65-year-old male with $100,000 you deposit in a one-time deposit, and that can provide up to 2 times or 3 times that dollar amount for long-term care coverage starting on day one. So it could have $200,000 in a pool of money that your family can access for home health care or long-term care benefits, or $300,000, depending upon the solution provided based upon health underwriting. And on top of that, you also earn a competitive interest rate based upon stock market performance inside the account that you can actually withdraw the funds if you don't need them for home health care. And whenever you pass away, whatever dollars are remaining, that all goes to your heirs.
Yeah, it's definitely a really interesting product, John. I think that's a good summary of it. What would we tell folks to do who maybe we've not talked about long-term care planning with, or who just have questions? What would be the best step for them?
I'll tell you what, if you're age 55 or older, I want to encourage you to have that conversation with your advisor about what is your true risk. Remember, we only use insurance and we only pay the premium for insurance for a risk that we cannot afford to cover ourselves. And so I'd encourage you to talk to your advisor. We have some phenomenal tools that we can go in and actually measure your exact risk. We can help you walk through probabilities and then have real life discussions such as, hey, what's your personal health history like? What's your genetics like? How is your knees and hips feeling? Things like that will help us get to a better understanding of what your true level of risk is. And then we can provide you with probably 3 different levels of solutions to help you make wise decisions and make sure you're covered.
Yeah, absolutely. I think that's a great way to put it, John. So if you have any questions about anything we've talked about today, whether that's helping you pick up nickels with some of the cash you have on the sideline or long-term care planning or the Charles Schwab transition, we'd love to hear from you. Don't hesitate to reach out to our office, give us a call or shoot an email over to your advisor, and our team is standing by to help you in any way that we can. So John, let's wrap up here. What is something that you'd like to send us out to the week ahead of us with?
I think it's critical whenever you're doing any level of financial planning, wealth management, or investment planning, you always want to make sure everything aligns with your values. And so I'd encourage you to have a sit down, have a conversation. If you are single, have a conversation with a close friend. If you are married, if you're in a relationship, committed relationship with somebody, sit down and have those conversations about what is most significant to you and why. And remember, we might be using the same words, but it might be a different definition. And so always ask the next clarifying question of why is that important to you? And then secondarily, how does that play out in real life with the things that we want to do every single day? The values conversation is what starts you down the path to make wise decisions.
Awesome. Love that. So guys, thanks for your time. We'd love to hear from you if you have any questions. Otherwise, we'll keep holding things down on our end and we'll talk to you all soon. Have a good one.